Good morning, it's Tuesday the 2nd. I'm FX Blue and this is the market brief. So sterling continued its recent rally as the lockdown easing started and some of the young'uns went back to school. Yesterday's manufacturing data delivered a slight improvement on April's number, and this served to strengthen market sentiment that perhaps the UK economy might have bottomed out. We live in hope. But of course, before we get too ahead of ourselves here, short sterling positions are at a 5-month high, so there is still plenty of bearish sentiment out there in the market, believing that this rally will run out of steam sooner or later. And that of course is supported by the triple threat of recession, negative rates and our good old friend Brexit. For now though, sterling topped out around 124.85 against the dollar yesterday, and we opened today around the 125 mark. Over in the US, the riots have served as a reminder that some problems run a lot deeper than the COVID pandemic. Coronavirus has taken a back seat for now, as the protests over George Floyd are likely to continue for some time. The National Guard has been mobilised, but the risk gauges remain in positive territory for now, so hopefully it won't get out of control. The dollar index has fallen on 8 of the past 11 trading days as activity has begun to increase across several of the G10 nations. And yesterday we saw the index fall below 97.85. Looking at the calendar this week, weekly jobless claims should fall below the 2 million mark, moving unemployment the unemployment rate are closer to 20%, and output from major sectors is expected to remain weak. And of course, the headline figure for non-farm payrolls is forecast around minus 10 million. So we still have a pretty big week ahead. The European recovery plan needs to be deployed now in order to deliver some much needed help, but they're still not ready and no further details have been released yet. It is probably safe to assume that Spain and Italy should get the most help. That's due to the size of their domestic issues. But more details on the plan are desperately needed to provide any kind of clarity. Any kind of clarity there. Yesterday's manufacturing PMI only fell slightly, which represents an outlier compared to other major economies, and this allowed the recent euro rally to continue. Euro dollar moved over 111.50, but it does look like it could run out of steam fairly easily. Right, that's it from me. Any questions, please pop them in the comments below. Otherwise, I'll see you again tomorrow. Have a great day.
If you do not have a clue, then just tweet through and ask FX Blue.